Hello everybody, hello, welcome back to my YouTube channel. Oyundi Fuduperani Mashapa, and if you're here for the first time, welcome. If you are a returning subscriber, a veteran in this channel, welcome for yet another exciting episode of Risk, Money and Insurance. And so today we are going to be talking about insurance, all things insurance, and specifically we are going to be talking about what we call a life cover. At the end of the day, you don't have an excuse, and I think another thing that is important to note is the fact that your age is also a contributing factor. We highlighted in the funeral cover video that they are priced mainly based on age, but with a life cover, they consider all those different aspects of your life, like the work that you do. Do you work in the mines or do you work in an office, right? Of course, someone who works in a mine will be assumed to be more likely to get injured or die. They're more likely to die compared to someone who's in an office, like just chilling in an office every day. And so these are the different things that take into account. And so what I'm trying to tell you is that the younger you are, right, the more likely you are to actually get a life cover, right, that will pay out a large amount but at a very low premium, because as I've said, we assume that the younger you are, the less likely you are to die. So insurance company, they literally work on the assumption that if you are going to get a life cover for 10 million at the age of like 23 or 22, you are more likely to pay, more premiums compared to someone who's taking out a life cover at 50, for example, for 10 million. They're more likely to pay more because they're old, and then they're also thinking they're more likely to die. So do take advantage of being young and not wait until you're like 40 or until you have children for you to actually get life cover, because then it'll be more expensive for you to buy life cover then. And we also know that the older we grow, the older we get, like the more we are more likely to get diseases and things, which can actually increase your premium that you will pay. So you better take life cover now when you're still healthy and young and things, and rather than wait until later on when you're now old and you've got all these different medical conditions and you're more likely to fail many medical tests that the insurer will send you to do. So you better do it now compared to like doing it later. And also in terms of the amount of money though that can actually that you can actually receive from your life cover, right? So in the previous video I mentioned that there's actually a thing called being overinsured, right? So with a life cover, when we say you're overinsured, we mean that the sum of money or the lump sum that you will receive from your policy is actually greater than eight times your annual salary, right? So if you insure yourself, because you can literally choose how much cover you want. So if you're going to insure yourself by an amount that is greater than 8 times, then the insurance company will start thinking, this person is overinsured. Simply because now you become a person of interest, because your family will be thinking this person earns 100,000 per annum, and if we kill this person, bro, we have a young 2 million waiting for us. So you are literally worth more dead than being alive. So it creates that conflict to say your family members might actually kill you if they actually realize that you have this huge amount of money that is just waiting there for you to die or something. So 8 times, that's like the limit. You can't insure yourself over that. If it's more than 8 times your annual salary, then you are considered to be overinsured, right? And also, like, another reason why people don't get life cover, right? Why they don't get life cover is because in many employers, especially in South Africa, when you like literally start working for them, they give you like life cover. the group life cover, right? So you are covered as long as you're working for that employer. And I think the tricky thing with that one is, if you're going to be changing employers, you won't move, like when you move from company A to company B, you won't move with your life cover from your employer, right? And so that is a disadvantage, because if you move from your employer, if you move from one employer to another, you essentially leave it behind and you need to join a new employer. And what if the new employer that you're going to doesn't offer life cover to its employees, or maybe there are like different terms or conditions related to life cover, or you have to seek life cover for yourself, and now you're at this age, 40 something, and now you need to go get life cover. So which is why it just supports the point that you need to get it as early as possible, and it should be an addition to what your employer is offering you at the end of the day, right? Okay, cool. And so one thing to also highlight, like right now we know what life cover is, the different things that you need to do, right? So with a life cover, you are essentially trying to make a room, right, for a situation where you pass on and you still have dependents that you need to support. So if you're going to be buying this life cover, then whatever sum assured that will be paid out should be dependent on how much will they need. Like, if I die anytime now, then do I still need to pay for their education, and how much will that cost? What about their monthly living expenses? How much will those amount to? And also, what are the other expenses that I can foresee coming, and for how long will they need that amount of money? And so that summed up together can give you like a sort of a rough figure in terms of how much cover you should actually take out, because at the end of the day, you want your family to be living comfortably even after you've passed on, right? Okay, cool. And so of course it will be subject to the limits, the 8 times your annual salary limit that we talked about. And it is also very important for you to, think about these things, because at the end of the day, if you don't think about them, then you're going to buy a cover that won't meet your needs. And these insurance products, guys, they're out there to meet your needs. So make sure that you buy a product that meets your needs, right? And other things to consider is, because there is a very large sum of money that is involved, that is associated with your life covers as well, you need to ensure that you buy your life cover from a reputable insurer. Because if you're going to just buy it from anyone, for example, or you buy it from a company that is not registered, you're going to die, and your family won't receive anything. So it's important to make sure that you buy this life cover with a company that you trust, because if you don't trust the company, then hey, what must happen when you're gone, right? And another thing to also note is, do your research. Like, I encourage people to not just say, oh no, Old Mutual has a life cover, I'm gonna get it with Old Mutual. Like, shop around, do your research, understand, like, okay, cool, which other companies offer life cover, right? There are so many of them in South Africa. There's Liberty, there's Old Mutual, there is Discovery, there are a lot of them. So do your research to say, if I'm taking out my life cover with this company, how much will it cost me? And at the end of the day, make sure that you are getting the best products that meet your needs at the end of the day, right? And another thing is, the same thing apply like with premium as well, because it's a whole entire process, like filled with medical tests, filled with this and this and that, and the person who's selling you the contract will send you different documents and things about the product. And I think what is important as well is to read the contract, like understand what you're buying into, underline those exclusions. Like suicide most of the time is not covered by a life cover, so understand those things to say, okay, cool, how is my premium structure? Is it fixed for my whole life, or does it increase with my age, or does it increase in line with inflation? Like, understand all those different things, because at the end of the day, this is a product that you will literally have for the rest of your life. You will literally have this product, own this product for the rest of your life. And so you don't want to get to a point where 20 years down the line you're like, but I didn't know this when I bought this cover. Like, nag those salespeople and show that you don't just sign for them to get commission, but understand what you're buying. Ask questions, ask about exclusions, ask about different instances. What will happen if this happens? What if I'm outside the country? What if this? What if that? Like, ask all those questions, because at the end of the day, it's your life. And one other thing that I just want to close this conversation with is the fact that a life cover normally, there's only one claim that can arise from a life cover. Like, you are the only person who is covered by a life cover. The other people that you will put down as your beneficiaries will get the money if you die and they're still alive. Then they will get the money and things. But with a funeral cover, it's like everyone who you put down, your beneficiaries, you as a main member, everyone is covered. But with a life cover, it's different in that it's only you, it's only your death that triggers the payment of that amount of money that you would have been covered for, right? And so it's also important to know that as well. But you can actually get life cover on behalf of someone else, though it's quite a tricky situation. You can get a life cover, on behalf of someone else by getting a life cover on behalf of someone else's. For example, if my mom isn't feeling well and I want to get a life cover on her behalf, then it has to be a whole process of consent and things. Maybe she cannot take out life cover because she doesn't have the money to pay for it and things, and I want to be the person paying for it, but the person covered by that life cover is her. It's a whole entire process, because essentially what you have to do in that situation is prove to an insurer that if this person passes on, right, I will be affected financially, right? So the financial consequences of them dying, I will feel them, right? So that's what you will essentially, try to prove, which is difficult, because at the end of the day, if you take a life cover based on someone else's life, then what is stopping you from killing them to actually get the money? That's where this term of insurable interest sort of comes in, because at the end of the day, we're like, hi boo, you take out a life cover on someone else's life who is like a total stranger to you. If they die, their death doesn't affect you in any way. So what is stopping you from just running them over and then submitting a claim, for example? So guys, we have come to the end of this video, and I really hope you guys enjoyed this video. You learned a lot as well. So thank you so much for watching, and bye. Don't forget to like, comment, share, and subscribe. Please like, comment, share, and subscribe. And until next time, bye.